Late January means one thing on Wall Street: bonus season. But it's not the champagne-popping party that it used to be. Despite strong earnings reports from many banks, cash bonuses, even at the most successful banks, have been cut. And it's having ripple effects in Manhattan's luxury industries. Take this Park Avenue penthouse, for example. It was recently reduced from $12 million to $10 million.
Historically, we would be anticipating a great deal of interest right after, during bonus season. Now, because of the structure, the new structure of many bonuses being restricted stock rather than cash, then there actually is a significant decrease in interest from people who have received bonus coming into the real estate market.
Ever wanted to live in a dome? Well, in Manhattan, there's only 5 places in which you can live in a dome, and this is one of them. Unfortunately for the Wall Street chiefs, though, this type of trophy apartment is no longer within their reach. After the crisis and the collapse in bonuses, the Wall Street titans are no longer scrambling to get one of these properties.
Before the crisis, obviously, there was a lot more cash in the market. Oftentimes, people literally coming saying, "I'll pay ask right away." A property like this one, which we could really call a trophy property, really was a target. 3,200 square feet. What's particularly nice is you get several exposures, and you have 3 private outdoor terraces, totaling about 800 square feet of exterior space, which are completely private. Now what we're finding is trophy buying, whether it's actually real estate or cars or anything else, has of course diminished significantly. And that's really what we're seeing. The buyers that we have in the market now, in this time of the year, the majority of them aren't in finance, and that's a big change.
I think the financial services industry are beginning to act like publicly traded companies. So I think it's the sign of the times. They are finally getting it. Bonuses are down, and they're starting to reserve more for shareholders, and dividends should go up, and stock prices are beginning to recover.
James Reeder is a compensation consultant for many of New York's high-profile financial companies. He says the industry has adjusted to the post-crisis era. Gone are the days when financial executives would pay themselves 50% of their revenues out of the shareholders' profits.
I know that there's a lot of anger out there with regard to bonuses paid on Wall Street and other companies in the United States, because people feel that there's something unfair about a large bonus when they don't have a job and haven't worked in 2 years. But rest assured is that companies are paying more attention to how they pay the bonuses, the amount that they pay, who they pay it to, and that it's based on performance, which is creating real value for shareholders of those companies.
But even with a wave of modesty sweeping across Wall Street, there are still healthy profits to be made. Bankers for Goldman Sachs will bring home an average of more than $400,000 for their 2010 compensation. And that's a 14% decrease from last year. Francesco Guerrera, Financial Times, New York.